This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices climbed more than 1% on Wednesday, paring some of the previous day's losses, as concerns about Hurricane Francine disrupting output in the United States, the world's biggest producer, outweighed worries about weak global demand. Brent crude futures were up 84 cents, or 1.2%, to $70.03 a barrel at 0704 GMT, while U.S. crude futures were at $66.56 a barrel, up 81 cents, or 1.2%. Both benchmarks fell nearly $3 on Tuesday, with Brent hitting its lowest since December 2021 and WTI falling to a May 2023 trough, after OPEC revised down its demand forecast for this year and 2025.
Global oil demand is set to grow to a bigger record this year while output growth will be smaller than prior forecasts, the U.S. Energy Information Administration, EIA, said on Tuesday. The widening supply deficit will increase withdrawals of oil from global stockpiles, pushing Brent crude prices back above $80 a barrel in the physical spot market this month, the EIA said in its short-term energy outlook. Spot Brent prices averaged $73 a barrel on September 6, the agency said. On Tuesday, futures contracts tied to the global crude benchmark slumped below $70 for the first time since December 2021.
Moving on to the top news in the energy sector.
Russia's Urals oil prices fell below the Western price cap level of $60 per barrel on Tuesday amid weakness in global oil prices, Reuters calculations showed. Brent crude futures were down 79 cents, or 1.1%, at $71.05 a barrel by 0948 GMT as weak Chinese demand and global oil oversupply risks continued to weigh on the market. The US, other group of G7, countries and Australia imposed the cap last year, seeking to reduce Russia's revenue from seaborne oil exports as part of sanctions prompted by its military actions in Ukraine.
Major buyers of liquefied natural gas, LNG, flagged risks of purchasing cargoes from the United States following the decision by President Joe Biden's administration to pause export permits of the superchilled fuel to non-free trade agreement countries. Officials from Taiwan's CPC Corp and Germany-based SEFE, which trades LNG cargoes and sells in Asia, stressed the importance of reliability of supply while responding to a question on the impact of the U.S. export pause on Asian markets. "I do trust the traditional LNG suppliers more than U.S. LNG players," said Jane Liao, vice president at CPC, told the APPEC conference. Next, we have the top news in metal markets. China's plan to expand its carbon market to steel, cement and aluminium will cover 60% of its total climate-warming greenhouse gas emissions, but the relatively low bar set for companies could blunt its impact in the first phase, experts told Reuters. The long-awaited enlargement of China's emissions trading scheme, ETS, will force around 1,500 industrial enterprises, including Bayo Steel, Anhui Conk and Chinalco, to buy carbon emission allowances, CEAs, to cover CO2 generated by fossil fuel consumption, giving them an incentive to decarbonize. But though they will be under pressure to meet the technical requirements of the scheme, they will also be granted large amounts of free allowances during the 2024 to 2026 implementation phase, and C supply will be ample, according to a plan released to the public for feedback on Monday.
The share of available aluminium stocks of Russian origin in warehouses approved by the London Metal Exchange, LME, rose to 67% in August from 65% in July, LME data showed on Tuesday. On-warrant aluminium stocks in LME-registered warehouses of all origins fell by 4% in August, a third month of decline after a surge in May. The May jump in stocks followed a decision by the LME to ban all Russian aluminium, copper and nickel produced from April 13 from its system to comply with US and British sanctions imposed over Russia's 2022 invasion of Ukraine.
We will now look at the top news in the agricultural sector.
Soft wheat exports from the European Union since the start of the 2024-25 season in July had reached 4.82 million metric tons by September 8, down 23% compared with 6.25 million a year earlier, data published by the European Commission showed on Tuesday. EU barley exports totaled 1.32 million tons, down 34% from 2.01 million tons in the corresponding period in 2023-24. However, the Commission said grain export data for France, usually the bloc's biggest wheat and barley exporter, was incomplete since the beginning of the calendar year 2024, while export figures were incomplete for Bulgaria and Ireland since the beginning of the 2023-24 marketing season.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.